you should essentially be writing yourself a contract and accepting those terms, that this is always what I'm going to risk, and I'm going to continue going until it's no longer probable. And then at that point, okay, it's time to change the strategy. But I find a lot of people say you only have 10 more trades until your ultimate drawdown. That's when people crack psychologically. And I think that's why building in a psychological buffer as well is just so important. And of course, the more experience you get, the less of a buffer that you might need.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1, for starting your day with calm intention. 1, to stay centered while you trade. And 1, to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hey guys, welcome back to Market Mamas. I am Becky, host, and I am here with another trader because this is my favorite part of having a podcast, is having conversation with other traders who have persevered in this game and have learned really valuable lessons in their own way. And then we can talk about what it looks like to become a successful trader and the journey that it takes to get there. And that many of us are still like mid-journey with, myself definitely high on that list of still dialing in my process every week. But today we're going to focus on my friend's process and his journey. This is Ross. Ross, thank you so much for being with me today.
Hi guys, it's a pleasure. Thank you very much for having me.
So let's start with who you are. Where are you from? Where do you live? Where you trade? How did you get started in the world of trading?
Yeah, so as you know, I'm called Ross. I'm from Scotland, so we'll tone down the Scottish accent a wee bit. Don't worry, we'll neutral it out so all the listeners can still understand what I'm saying. And essentially, I work for DND, which is obviously the company of one of your previous guests, Raj. So I loved the episode that you've done with him, and obviously we chatted a little bit on LinkedIn, and here I am.
Yeah,
so yeah, quite exciting stuff.
I love your accent, so carry on with that. And Raj was such an inspiring guest because he's 20 years veteran as a trader and had such wisdom to impart. And so I was so grateful to have him on, as I am you, because I think that it's a different conversation when you talk to someone who's been trading for 20 years versus someone who is under 10. It's just different phases of the journey. How long have you been trading?
Yeah, so we're coming into my 6th year now. So I'm 25 years old. So all of this sort of started off when I was about 19, turning 20. Obviously, it was COVID times. Things were shut. There wasn't that much to do. Being a Scottish individual, my normal hobby of going out to the pub was sort of squandered. So like that, I just thought I was always interested with investing and trading and just how the stock market and everything worked in general. But I didn't know really where to start. And you look on Instagram and there's so many people just spamming with ludicrous trades and ludicrous pieces of advice. So I thought, okay, what I'm actually going to do is I'm going to look at some of the more reputable companies. And the company that I ended up going with was based in London. And it just so happened Raj was actually working there, teaching people how to sort of trade and start off their careers. And then from there, obviously, Raj started his own company. And he just kind of said to me, he's like, look, Ross, I like what you're doing. I like the way that you're doing it. Do you want to come work for us? And I was like, yeah, I'd love to. I think that's a great idea. So, and then, yeah, the rest has been history ever since. That's been a couple of years now. I think it's my 3rd year now working with Raj. And I've got to say, it's been quite the journey. He really does have a wealth of knowledge. And yeah, he's a great lad. He's a really great guy.
Yeah. It's so cool how that evolved, like we just meet people and you never know really where something is going to go. But like the more you just show up for life and you put your best self forward. I mean, you didn't join that group to work for Raj. You just like wanted to get around good people. It seemed legit. They actually seemed like they were teaching quality content. And then you showed up and probably you must have like put forth good effort and energy and been a positive, helpful guy and dug into the work of it and got some skill as a trader in order to even be offered that position. And so I love that the heart of that experience is just showing up and trying hard at something, and then look what can come of it. I mean, now you get to continue growing as a trader, but also like work with this awesome mentor that, as you know, has so much experience. That's awesome.
Yeah, I mean, I was quite fortunate. My friends always joke with me that I just seem to have a stupid amount of luck in life in terms of what I do. But I really think, like you said, it's just about capitalizing on those bits of fortune and sort of taking every opportunity you can, and networking as well is just as important as, trying hard and getting your head in the books. I think like coming on this podcast, speaking with you and that, it's great. I get your, now I have a new friend and we get to have some really great conversations.
Yeah, exactly. And I think you could say it's luck, but so the people I know who have like really pushed it in life, I think someone would say that it might be luck, but I think that there's like a serious perseverance in there, because there's been periods, I mean, for me too, and the things that I have created where I could have quit, and I decided, you know what, I'm just going to keep trying and keep working and keep talking and be open to this, and like, cold calling guests to be guests on Market Mamas at a time when I, didn't have a guest lined up. And then it's like some of the best conversations can come out of that type of energy. So I think that, just keep putting one foot in front of the other, and life can be anything we want it to be. I don't know. That's what I think.
Yeah, no, I agree. I mean, I was 3 years, obviously, before I sort of joined on with Raj, sort of learning. I mean, the good thing about where we were before, there was a community. So I did try actively meet up with as many people as I could back then. But there is an element where
that was intention.
Yeah, there we go. But there is an element as well where, you are on your own, and you're really, I think that's where the nitty gritty hours sort of count, is in that sort of beginning momentum. You just never know where it could lead you.
So what did you do in those early years? What did that look like for you in those first 3 years of learning to trade? Like, how was it intuitive early for you, or what was easy and then what came harder? How did you get a system, I guess, that got you to this point in trading?
So when I first started off, I mean, there was quite a few ups and downs as everyone sort of goes through. And I was fortunate. I had a really good mentor as well, which is James, which is the other boss that works with Raj. So me and James, we worked very, very closely together. And he was really sort of the person that got me through everything when I needed psychologically. Because me and James, we got on really well. We're very similar in personalities, in the sense that he'll just turn around to me and tell me to shut up and get it done. And I was like, sounds great, let's do it. So it works really well for the two of us. But at the same time, he's probably the most caring individual you'll ever meet. So he really helped in the beginning. And the way that I found myself going through was, and this is where I think I've changed in terms of my trading personality as well. I was very much we're just going to get this done, storm ahead. And that's great until, it isn't so great further down the line. And again, I think luck played a little bit into the element of this, as it does in sort of smaller samples. And I went on a really, really good winning streak whilst I was down here. And everyone was, how's it going, Ross? Like, I've seen you doing really, really well. And I started getting built up a couple of levels. And of course, what happens, the scales of probability tip, and you have a huge fall from grace. So I've been similar to Raj when he was talking about probably the worst thing that can happen is you actually do well at the start. I also had that experience as well. And that was rather humbling for me. But I'm glad it happened, because then what it's really done for me is it put me down sort of the route of statistics, probabilities, and data, because I wanted to be right. I have back then as well, even more so, I had this constant ego where it's like, I've got to be right, I've got to win. And instead of, I suppose, I always like to tell people that, if you do have something like an ego, the best way to deal with it is to repurpose it. Use it to help yourself. So I'd done that by moving my ego into, how can I, prove to people that I'm still right, even though, I might be losing or going through a hard time. And for me, the only way to do that was to have statistical data and go through some of these marketplaces and actually show, okay, you can get through hard times and keep going.
Yeah. I love the idea of reframing it, because let's be real, like, we all have an ego. I think you can't actually strive to be a great trader without a level of ego involved, because there's a little bit of an energy to like thinking that you can beat the market. And so in order to even be a trader, we all have some degree of ego, but to reframe it and focus on what you can control and the effort you can put behind it is much more powerful stance in terms of, you can't shut it down, but you can organize it in a way that, keeps you focused on, staying humble through the process as well. It's a great point.
Yeah, because trading, it's the biggest thing that's going to humble you. It'll really... And I felt it a lot, especially being, younger in my 20s and a guy. And I had that sort of internal ego and motivation that you just feel invincible. And then especially when you have quite a fall from grace, and quite a publicized fall from grace, obviously with that other company, because it's all great, one day telling people you're doing great. And then you always see as well, they always talk about the trades, or they post about the trades. But as soon as times get a little bit tough, you notice they go quiet, and it's difficult. It really, really is difficult. And I think being able to, instead of your ego of, I can't lose a trade, repurposing that into, okay, how many trades can I actually go on to lose before it's statistically improbable, and using that ego to find out all that data and go through that market to find out what your win rate is. And that is, for me, what really made that big difference.
That's a great tip for young traders, is to think about the statistics and probabilities of trading and to kind of lean that way instead of the emotional outcome. Because I think there's an emotional tilt, snowball situation that a lot of traders can get into when they encounter their first real big drawdown after finding some early success, because it hurts really hard, especially when you have made money and then you start to lose. In that moment, it's really easy. It's much easier, I would argue, to just say, like, what the heck, and get really stuck in negative emotions and fear and anxiety, and then let bad trading habits seep in. But I think, like, it sounds like what you did, if you can instead pause a little bit, slow that roll a little bit, and think about the statistics and probabilities, and hold to a system more so than getting emotional with your trading. That seems like a much better way to navigate that period. That sounds powerful.
Yeah, it really is. And I think a lot of people underestimate, obviously, statistics, and not only that, but what the actual probability is of losing streaks or drawdowns as well. I mean, the majority of profitable traders that I come across within the firm and in the retail world as well, the majority of them, they probably trade around a 50% win rate, maybe risk to reward 2-1. And a lot of people don't actually realize that even off the course of that, say, for example, you divided your entire drawdown that you had by 30 trades, you still have around a 1% chance of blowing your account. And that's through a simulation that essentially ran through a 5 million sample, Monte Carlo. So to know that you could be perfect, you could do nothing wrong at all, and you could still, if you had your total drawdown divided by 30, trading systematically off of that, you still have a 1% chance of blowing your account. It's tough. And at the end of the day, if we're in a large room of people, there's going to be some poor sod at the back that's going to happen to. And I think that's what's really important when it comes down to the psychology of knowing that, but also building in your risk and your exposure off of that to make sure
honestly,
that
that's kind of
happen.
a positive statistic, really, because that's really protective. Like, to say that 99% of the time, if you just trade your system to its capabilities and you don't revenge trade or overtrade or emotionally trade after a stop, then that's a recipe for a profitable system. I think the trouble comes when people are not willing to stop at a reasonable loss within their system's expected outcomes.
Yeah, I agree 100% with that too. That's where people really start to fumble, and then things start to get, unwound when they start heading off the statistical path and they go down into emotional trading. But for me, the key is always you make something so that it's improbable. I like to have no exposure at all. Any chance of me ruining my account, even 1%, is always too high for me. I like to trade, basically always have all my drawdowns within the realms of statistical
Nice.
and probability. And then the most important factor for me is always to build in a psychological buffer zone. And I think a lot of people forget about that, because a lot of people, for example, okay, it's very improbable, but they might come close to, say 20 trades worth of a drawdown off of that. But a lot of people then will psychologically snap, they'll adjust their risk, when really, for me, risk management, that's day one, right? It's not something that should ever be changed or altered. You should essentially be writing yourself a contract and accepting those terms, that this is always what I'm going to risk, and I'm going to continue going until it's no longer probable. And then at that point, okay, it's time to change your strategy. But I find a lot of people say you only have 10 more trades until your ultimate drawdown, that's when people crack psychologically. And I think that's why building in a psychological buffer as well is just so important. And of course, the more experience you get, the less of a buffer that you might need.
So tell me more about that psychological buffer. How and what does that look like for you? How did you figure that out? And how do you put that into practice?
So essentially, like I was sort of saying there, in terms of, so my strategy, it runs mostly around a 50% win rate. Again, risking 1 to make 2. I know through obviously the simulations and risk exposure that I've ran in terms of the odds of me blowing my account, 30 trades. If it was to divide, say you had £10,000, you divide that by 30, and that's what you get your risk per trade. That's just how, in terms of how systematic I am of going off of that. I know, 1%, there's still an element that it could go wrong. So then you might say, okay, I'll move to 40 trades. But then at the same time, for me, it's that sort of, if I get to 25 trades down, say in the drawdown, for example, at any point in time, then in the back of my mind, there's a little voice going like that. And it starts to concern you because you're like, I'm halfway there to draw down, or I'm further than halfway. And you start to get a little bit scared. So I think, adding in, for me, it's always, I added an additional 20 trades or so. So I divide my total capital that I want to risk by 50, because that puts it well into the realms of statistical improbability, but also gives me a buffer of around, 15 trades or so additional on top of that. And that for me is the most important factor. It's like, for example, if I was to just put money in the S&P and draw it out every year, I would probably have, say, a 6-year worth of a buffer if that was my only form of income. 3 years in case the market crashed, like the dot-com bubble and things ran on for a 3-year period, and then 3 more years so that psychologically, I could be sound in my own mind. And I think that's where a lot of people sort of underestimate a psychological buffer built in, and where a lot of people get stung out too, because that's where emotion just comes into play.
I think that's such a good point, because I feel like people get emotional much faster when they're over leveraged, when there's too much risk on the table. How can you not put that trade on and then recognize, shoot, like this is make or break it. I don't know how I accidentally, risked my whole account or even half my account. I mean, that's a massive risk in order of like, do you really want to start back from scratch when you're going in that heavy? And then how can you not be emotional when you don't have that background? So I love how you create that psychological space to stay level and patient and calm and focus on your trade situations, your trade setups and executions, because you know that there's a huge margin of cushion that no matter how this trade goes, win or loss, my accounts are fine because I have created the structure behind that. That's such a good way of kind of mitigating the potential emotional risks that we could fall down into.
Yeah, I mean, for me, it's just about every sort of book or every form of investment I have, whether it's sort of day trading or swing trading, it should be, I always make it in the realms of a statistical improbability and then the realms of psychological soundness. So I know I can always trade essentially happy knowing that, okay, if this goes wrong, it really is because market conditions have changed or the strategy no longer works. And it's not necessarily anything that I've done. And I know I have a psychological buffer built in too, so that I don't get too emotional when I've come halfway towards my total drawdown or total exposure. And that's really, for me, that's what it's about. It's always about the sort of consequence of being wrong. It's not I always love the quote of what matters is not the probability of being right, but the cost of being wrong at the end of the day. And you use things like Russian roulette analogy and theory. So, there might be a 1 in 6 chance of something going wrong if you play in Russian roulette. That's the odds of 83% of things being right. A lot of people in trading, they'll take that. But I guarantee you, you would never sit there and play the game. But to me, this has got to be more than just a game. You've got to take it as serious as anything else in life.
So why are you so mature? You're only 25.
I spent too much time with Raj. I'll blame him. That's what it is.
A strong mentor. That's what I hear.
Yeah, Raj and James, to be honest with you, the two of them, they really have, they've been awesome to have around and sort of bring me through as well. So that's, it's been fantastic. And then obviously I've sort of pushed my way down the sort of data route and statistics within trading, and they've sort of just allowed me to flourish in that route as well. So it's quite nice. Although it could be a little bit boring with all the math talk.
You know what? I literally just recorded the episode that just came out just a couple days ago. Well, a week ago when this episode comes out, but it was literally about like boring trading gets you paid. Like you don't need to aim for home runs and shoot for like high leverage because you think it's an A+ setup, or like really risking so much in order to have these outsized days that you're so excited to post about. But if you actually lock into a system and you have consistent bread and butter, solid setups that you put your normal size on and you lock in your profits, like that is a recipe for accounts compounding. And it's like that energy, I feel like, is drowned out in a lot of content that you see out there in social media because there's a lot of hype. And hype is not actually like a strong business model in trading.
No, and I think that's the problem around it, is because really in terms of marketing for these people, it's not what sells, is it? In terms of boring, they want to see the big, they want to see the beautiful, and you see people post and they've got a trade with a £10,000 win, but there's so many variables that aren't included on that. Like, what's his account size? What has he actually risked? He might have £100 million in the bank, and he's risked 5,000 to make 10,000. To him, that's nothing at the end of the day. And there's so much missing from that, but it'll suck a lot of people in. And that's really what sort of bothers me in the industry, especially with younger people as well, because they're so susceptible. And then what you'll find too is, in terms of people, copy traders on Instagram or just in general being like, oh, come trade through this brokerage and that. You got to remember, these people are getting a kickback for every trade that you place. And a lot of these kickbacks as well goes off of how much that you're placing trade wise. So a lot of the times these people will encourage you to over leverage because then they make more money. So it's you really, really need to be careful. Anyone that encourages you to ever over leverage your account or your position or risk way more than what's statistically probable, in my opinion, that they don't have what's best for you at heart. They know that whatever they're getting it back in kickbacks is really what's paying them at the end of the day.
Which is so frustrating. I mean, you can't just throw your trust around blindly, because there is a lot of that energy out there of like, if people are really advertising something, there's got to be something in it for them. And then you need, if you're looking for something in that world, you really need to do your own due diligence and dig into what the risk versus benefit is for you and what you need from that, and like protect yourself, because there's a lot of ways that you could be targeted. There's so many products and companies out there for sure. And, I think that's why I keep showing up with Market Mamas, because I feel like these conversations are just, they need to be held and they need to be like heard and rationalized, because I think there's literally billions of retail traders in the world who are struggling with, breaking through, and a lot of them quit. And I think that there's unexpected, expectations from this, that you think that you can, just find the right guy and then you'll have the Lambo like his Lambo by, Christmas. But like, that's not generally the reality for most people. Most times it's like hard, and you really have to struggle to find the right mentor and then stick with them and like make the changes to yourself as well as your strategy. And that sort of perseverance and normalizing the fact that it is not as easy and as shiny and as outsized as what it can look like is actually more factual for a lot of retail traders trying to get through.
Yeah. And what we need to remember as well, the best hedge fund in the world, they're the best hedge fund, because I'm sure it's around the last 10 years they've averaged something like 37% a year. And then you've got people coming out here trying to turn £1,000 into $1 million. And it's like, we just need to slow down a little bit. And as you said, realistically, the best way to do it is just compounding. And okay, a lot of leveraged accounts in that they allow you to risk your full amount of capital that you want to. And I think people just need to be careful as well that they're not putting money on the table that they can't afford to lose all of it. And that's the biggest thing for me. Every penny that I've ever risked to anything, even in my longer term investments and that too, I could wake up tomorrow and it could all disappear. It's just part of the parcel, really. It won't affect me deep down. And I think, that there is a little bit of a way up, and, I kind of swither back and forth sometimes, especially with my age of, should I be more risk inclined? Because I have less to lose, because obviously I don't have children and, I have no responsibilities. So I can actually risk more on the table than what other people. But there's just something in the back of my mind that always sits there and says it's not a great idea.
Well, that's logic. I think that's probably some logic in there of like, just because technically you don't have to pay your child's tuition doesn't necessarily mean you need to like, shoot for the moon and risk a massive setback if it were to fail. And I think that there's a lot of logic behind that choice. Like I just did a big research study time for Jesse Livermore, the trader that I think everyone has heard that name. And I did a Learning from Legends episode for Market Mamas on him. And I found so many things that I didn't fully understand. I mean, he started getting into the trading world when he was 14. And his biggest win was the way he capitalized on the crash of 1929. And he was age 52. And so a lot of us are like, he became a trader at a young age and made millions and millions and millions and had these outsized giant wins. Well, his best win was age 52 and he started at 14. So like, chill the F out and like give yourself time to let it grow, like learn and take your hits and then slowly leverage up higher. I mean, he couldn't have made that massive short and held that massive short through that huge crash, maybe wouldn't necessarily have had that skill at age 23 or whatever.
Yeah. I mean, that's the big thing. And that's sort of where, a lot of what I try to do is a lot of my money I make off of either trading or working with Raj, or that it just goes into sort of longer term investments, positions. And a lot of that, again, it's about, for me, the diversification is making sure you don't put all your eggs in one basket and sitting there and saying, what's my exit date? And for me, a lot of these are 10 years plus, so that I won't physically look at, I don't care about what happens in the in-between time. For me, there's only 2 days I care about the price, and that's the day that I bought on and the day that I sell on.
There you go. Let him go.
You really just got to leave them. And if you've diversified your portfolio well enough, you shouldn't, there's no reason to continuously be checking and worrying about what positions and what's happening, because the market goes up and it comes down and it moves up. And sometimes it comes down a little bit further. But a lot of the time, obviously, if you look at the US stock market at the moment, we're really pushing all-time highs again. So it's quite interesting. Really is.
I think that's a great point of like when you have, so if you're a trader and you've gone to the point where you have had some consistent profitability and you're now on the upside of the expenses, the market tuition versus the amount that you've made, there does need to be a point where you start to think about, doesn't need, but a lot of traders will find that there's a point where you need to start diversifying your money and not just using everything that you're earning to trade larger and larger size in an intraday setting, but instead put it in different pockets and swing trading and long-term trading and investing, and potentially, people will diversify into real estate and stuff. And I think that's such a strong model because you do want to be able to have some money working for you in a more passive situation that you have researched and you understood, but it doesn't necessarily mean that the only avenue is to just go bigger with what you have done to get that early profitability. I think that is a nice example of the conversation that can happen after you've been trading for, a handful of years.
Yeah, no, I would definitely agree on that. And that's sort of where, I really try to build my positions off of, is just continue to diversify. Although I do stick obviously with sort of my core trading and strategies. I did just there for the last year and a half only trade copper. So that was quite an interesting experience and quite an interesting market. I've expanded now though to quite a few more commodities, and I've learned a lot. So a lot of that was day trading on copper. And people always ask you, it's like, well, strategy-wise, what's the best strategies? And my answer to that is always, there's a million good strategies out there, right? But the easiest one for me is always the best one. I think there's a lot of people that overcomplicate their charts. There's a lot of people that overcomplicate in what they do. And you look over at some retail traders and they've got a million different indicators up on TradingView. And for me, that it just pains me, because I look at it and I'm like, what are you looking at, man? And because there's so many things to consider into bias and choice. And the way that I trade is simple. I don't have a single indicator, no moving averages. My candles aren't even red or green, because I don't want a psychological burden of seeing green and want to buy, or red and wanting to sell. I want things to be the most boring, like just plain field out there possible. And really for me, it's just about volume and price action. Everything's built into the price. You don't need really indicators to be successful. There's a lot of good companies out there that'll teach you price action, or even the STA, the Society of Technical Analysts. They do entire coursework on just market analysis and price action, and of course some indicators of that as well. But for me, it's always about volume. It's about making sure you're not trading markets that are in sideways or consolidating periods. And it's about latching on with the momentum when the sort of big players or the bigger hedge funds and that jump into the market. It's not about trying to second guess that whilst the market's going like this. sideways. And then from there, if you could trade in volume and you're always trading within a trend, for me, strategy then is just entry. And that's why, it could be a million different things. And it could work in a million different ways when you have volume inside that market. And obviously each strategy will have its own win rate percentage. You have your own risk to reward ratio with inside of that. And that's for you to go away and build your data off of. And then that's where you build your strategy. You have a data model behind it. You've known for the last 4 years has produced X amount of returns with X amount of win rate. And then from there, you can move on going forward. But always remembering that market conditions could always change. I think that's the big paradox, isn't it? You only have historical data to go off of, but who's to say tomorrow, goes out the same as what today or yesterday did?
Yeah. So many good points on what you just said. I don't even know where I want to start, but let me start with the fact that you did copper, one instrument for 1.5 years, you said, and I have an idea on that, but I'm wondering why you chose to stick with one instrument during that period.
So for me, I was sort of transitioning into futures trading. I was looking through all the markets, obviously, that I could trade. And I just liked the structure of copper at that point in time. And I also thought it would be fascinating to sort of understand on a technical chart, but also fundamentally exactly what one market does over the course of that period. And initially it was going to be a year, and then I would maybe pick up a couple of other marketplaces, but it just ended up going on for 1.5 years. And I mean, I lived through some very interesting periods, to say the least. Obviously, Trump being elected, his tariffs, the market's been up and down, Chinese economic data, and then you get one day it's down, the next day you've got a bit of optimism around the stimulus package coming out of China, and the market's up. So it was fascinating. There was a lot of patience required, though, because there were some days you would just come to the copper screens, and honestly, I'd be ripping my hair out. I sat there and, not every day's a winner. Not every month's a green month. And that's what I really found off of building up that sample was overall the strategy throughout that 1.5 years, it did perform to around a 50% win rate. But some of these months, the entire month was maybe only a 30% win rate, which is down in the negative when you're risking 2 to 1. And I think that's really difficult, especially for the likes of myself. What I thought was good was I could see my own performance gap within that period too. So I could obviously trail how the market was performing versus how I was performing. And I drop around 10 to 12%. So, some of these months, they weren't fantastic, but you get through them and then you keep pushing, and I think that's really, really what matters. And then from there, you can assess what your performance gap is. And that's what I really try to concentrate on every day now is just closing what the actual marketplace does and what my results are, just to see how close I can get to true results, I suppose you would call it.
Yeah. I love that. So what I love about what you said and zeroing in on the copper market for that period of time is that I think that is how you can really get your strategy dialed in the fastest, is by locking into one core concept of trading and one market, and then just study it relentlessly and pull the data from it and think about it and make notes and then see it day in and day out. Because I think that's how you can get stronger with more quickly seeing, volume and candle pattern reactions and what that looks like, and then what came after it and how you could have best capitalized on. That way, when it repeats itself, you can be in on the move a little bit sooner and with a little bit more confidence, because I think there's a lot of strategy and market hopping for early traders. And I think that can actually be to your detriment, because sure, you get exposure to a lot of different opportunities, and there is so much abundance and opportunity in the market and the world of trading. But when you are still trying to get just a consistent strategy to extract money, I think looking in so many different ways in terms of strategy and markets is going to be too much. And so if you can lock in, for me, I have had my most successful periods by only trading one indice, because I really got my system to work on that. And I understood volume so much better when I really just dialed into either the Dow or the S&P and saw what it looked like to have a strong response with volume at my key level. And that would give me a powerful setup that I'm quicker with now because of that dedicated time.
Yeah, I mean, and that's the big thing. And in terms of fundamentals, obviously, on my shorter term trading and my swing trading and that, it's not something that I take into consideration in terms of whether I enter the trade or not, other than just to basically what I use all my fundamental data for is to see what do I think this market's going to be? Is there going to be a lot of volume in the week coming, or is it going to be continuing in its period of consolidation? Because everything's really built into the charts and built into the marketplace. So like for last week, for example, the first thing that I do on the Monday is I sit there and I go, right, what's going to be moving our markets last week? So we obviously had Trump doubling down on his claims to take Greenland last week. We know where that's escalated into. Iran with the protests going on, and then obviously America threatening military action. So immediately I know, well, oil's going to be all over the place. You've seen oil push up and then sort of settle back down as Trump sort of eased off a little bit there. We've got China and Japan going back and forth between each other. We have Russia, Ukraine, America, everything with Venezuela. And then sort of you jumped onto the, all the economic data coming out for last week, like CPI on Tuesday, PPI and retail sales, unemployment claims, all of that. People just use that as gathering pieces of the puzzle to work out what the Federal Reserve are going to do when it comes down to cutting rates. And it's already been priced into the market that they're going to cut another 2 more times with 25 basis points. But people are trying to work out how soon is that going to be? Are they maybe going to cut more? What does this data say? And for me, it's not about second guessing where the market's going to go off of that fundamental data. It's just knowing, right, week ahead, these markets are, they're going to have a bit of volume to them. And I'm going to see whether, I can jump in with my strategy off the back of that volume. More than anything, they don't actually determine whether what my bias or whether I take a trade is. Like I said, it's all built into the marketplace itself. Because if the market's, fighting between buyers and sellers, it's going to show you that, because it's just going to be a big sideways market and just stuck in consolidation. And then, of course, as well, we also had the Powell as well, and the criminal investigation that the Department of Justice opened. So that's really how I look at things in terms of fundamentals and looking at volume, is just seeing what's there for the week ahead. And then off of that, just trading the technical chart. And then obviously this week we've had everything with Greenland and all the tariffs. So immediately, again, I know at the start of this week with sort of swing trading commodities that gold and silver are, they're going to be pushing. And right enough, wake up Monday morning and there's an entry to the strategy. And yeah, I mean, if there was an entry short, though, I would still take that short, even against the fundamental news and bias, just because all my data is built off of the chart. It's not built off of taking this into consideration. But it's always nice to know, okay, we are going to get that injection of volume. And then I think it's also important as well in terms of exposure. A lot of people, especially around the European Open and that, they ask me, well, what do you think I should do around the European Open? Day trading on the 5 minutes. And honestly, my answer is go away and study the market more. If you don't know what news moves your marketplace, then what's the
trading?
Point? You really need to dig into that. And it was like when I was trading copper, obviously there's a lot of Chinese data that comes out where someone, trading the sort of DAX or that, they're not going to care what Chinese manufactured data is going to be. So it all really depends on what market you're trading, how that's going to move your market, and then of course making sure you're not overexposed to these markets. That's why, with leveraged crypto and that, I'm always very sort of careful of that, because we've seen some huge mass liquidations over the course of the last year. And I think that's really what you need to be careful for. And that's just knowing that in the back of your head, that's your exposure to the market. That if something comes out and Trump slaps 100% tariff on China, that market could collapse like it did. And just having that awareness of, okay, this is my exposure. Maybe I'll spread this out between different accounts and different brokers to reduce the entire amount being wiped out. So I think that's really important in terms of volume and the fundamentals, but that's sort of as far as I take it in terms of strategy.
Yeah. That's so good, because it's really a holistic approach to everything, because you do want to make sure you're paying attention to any sort of fundamental drivers that can have a large impact in your trading potential opportunities, and then have, a system that is protective of that in case any of that goes down in a rapid sequence that you can't, anticipate. But then also like structure your technical approach and your entry around, the whole big picture, not only just the fundamentals and not only just the chart, but like kind of all of it together, and what that sets you up for the most highest likely potential. And then you only enter if the opportunity presents that is in alignment with what your other data supports too. I mean, I think that's a recipe for like what we call an A+ setup, is when, you have all the confluences that make sense and are moving together, then you can really feel more confident in your trades.
Yeah, and I think that was the great thing as well about trading copper for a year and a half purely was I learned a lot, and I learned a lot about myself as well. I learned that I'm actually better on the higher time frames. I wasn't as good or as quick as what I'd like to be in terms of my executions. The slippage on some of them was just killing me as well on that marketplace. And then the structure of the lower time frames. Obviously, you have more volatility than what you do as you go higher up. So I actually found, in order for myself to close that performance gap, really the only thing for me to improve was to no longer sort of day trade and was to move higher up on the time frame, so I could really sort of close in that gap between executions and just like that, making sure that I don't really get slipped much. So that's what I learned. And then obviously you have the good and the bad. You have some months that were really, really good. There's a lot of good volume. The markets roared away to either direction. And then you have some really, really poor months as well. And since Trump came in, I mean, it really just, the conditions changed. They really did. And things
Really
got
did.
really interesting. And I think that's where you got to become disciplined, because the motivation goes out the window and it's just completely gone. And you've got to still get up there every single morning, because tomorrow might be the day that it changes. And it's, again, that's why it's important to know when things are no longer statistically probable, because either I'm going to wake up tomorrow, things aren't statistically probable, or I'm going to have to keep doing the same thing that I'm doing until I prove that to be the case, or it gets better. One or two things are going to happen. And I remember back in October time when we were in Dubai, like that, copper, some shocking results for the last 3 months. I went through 3 months. I hadn't made a penny off of the market. I wasn't down massively, like just down, small amounts. But I'm going along and I'm giving a presentation with D&D and Raj and that, and we're up on it was the 138th floor of the Burj Khalifa, and you're all the way up there, and I'm having to give a presentation. It's like, damn, I haven't made a penny in 3 months, but you need to lock in, and you need to keep pushing. And it did get better, and I ended it on a high. And overall, if you looked at the overall portfolio, it done well over the course of that year and a half. And it's just about remembering that bigger picture. But yeah, there was a lot of bad moments in it, and that's when really, like, you're up there. Normally I'm so psyched up for presentations and talks, and I'm so motivated, and at that point I kind of had to psych myself up a little bit going into it, because you're trying to have like a conversation like today, but it's like, damn, it's just been difficult. But you do get through them. And like I said, one or two things are going to happen. Is either you're going to find out that it's no longer statistically probable, you've not done anything wrong, markets change, that's fine. So then you have to adapt or change strategy, or you're going to find that you get through it, which I did, and then everything's going to be fine.
I am so glad that you said that, because as the host of a trading psychology podcast, when I am having like a red week or a red, couple weeks or something, sometimes I have to give myself a real talking to, being like, I can still host this podcast and give a killer interview, or like, really, I want to dig into this topic. It's a topic that speaks to me, and I planned out this episode. But then sometimes you got to really rally that energy, because it's hard to sometimes be an educator or, out and creating content around trading when you're having those moments. But you do just go to the logic. Like, that's what I have had to do too, of like, listen, logically, my trajectory is overall profitable, and I have a strong system that I trust. I have good people around me. Like, I'm qualified to have this conversation and to lead, potential groups in this way. But trading has some mind effery potential in that way of like, sometimes you're just going to have to hold good energy, even in a period of drawdown, while you sort out, did the market change? What's going on with my system? Do I need to modify this or this? That's just the world that we're in. Like, there is no guarantees as traders, and we have to be able to be flexible and give ourselves some grace to recognize that you can't be a trader and expect every day, every week to be green, because that's just not, the way that it works all the time.
Yeah, and it kind of goes back to like when I speak to sort of a lot more people from that are more novices, retail traders, and they speak a lot when things are going great, and then they'll go quiet, or I'll bump into them and I'll say, "Oh, how's it going?" And they're like, "Yeah, it's going good." And then that'll sort of be the end of the conversation. Where if things are soaring and they're doing really well, they're talking about it all the time. And I mean, my big thing was always, again, it was sort of, I was trying to talk more and more about losers when I was going through them, especially when I first started off. And that was sort of my coping mechanism, was I got to keep just saying, oh yeah, I've lost 5 in a row, I've lost 10 in a row. Because I actually went on a period where I lost 15 in a row. I actually beat Raj. He's only ever lost 14 in a row. So I finally won up to him somehow in life, but not in the way that I necessarily want. But yeah, I mean, something like that. And the biggest thing for me was, this is obviously when I was starting off, and I gave up on that strategy. And what was the real eye opener for me was I continued to follow it though. And I realized had I actually just stuck it through, I would have built back up and made back all of that money that would have been lost. And you sit there afterwards and you're like, God damn it. But for me, then that's sort of when the switch flipped inside of my head. And I was like, okay, I actually need to dive a little bit more into this and find out what can be probable and where to go. So although at the time it was very humbling and, sort of more humiliating to be built up and then knocked down, I actually consider that probably the best moment I've went through.
Okay. Cheers to you, because you just said what not a lot of people want to admit, but periods of drawdown and loss can be such substantial teachers and motivators to the next phase of our journey. If you think about the stock market, higher highs and higher lows, those drawdown periods, you give back some of the gains, but then it's another launching pad to make even better success and momentum forward. And I think as traders, it's hard to sit in those red periods and be okay with it, because that's not what we're trying to do. We're trying to make money. But in the course of that, we have to learn and modify and refine our process and evolve into even better traders. And that looks like we ought to learn more from losses, because there's something that maybe could be tweaked or something could be gained, or it tells that the market is shifting. And then we can use that data to improve moving forward. And I think that for me, I have improved my psychology by embracing that fact of if I had a red day or a red period, what can I learn from this and how can I be a better trader for next year based on this period that maybe is unpleasant right now, but is teaching me something that I need to know. And that is grounding for me.
Yeah. I think one of the hardest things too is I could sit here and tell you, you're well within the realms of probability. Keep going. Keep pushing, keep going. And when I was in that losing streak, I remember James, obviously at the time, he was like that to me. He's like, basically, get on with it, Ross. He's like, just keep pushing. And I kind of backed off from what he was saying. And it was only until afterwards that I realized. But now I realize to this day, it doesn't matter how many times that I tell you, you're still probable, keep rolling, unless you yourself have went through and collected that data, unless you yourself have a basic understandings of statistics and probabilities. You're never going to believe anyone else, because that subconscious is always going to creep that doubt into your mind. You have to subconsciously believe what you're doing every single time. And I seen an edit on TikTok recently, actually, and it was a woman asking Warren Buffett, and she's like, you're the people that we look to for advice and investments and all of this, and she's like, but when it comes down to you having doubts or questions, who do you look to? And he just turned around and he said, I tend to look in the mirror. And it's funny in that, but that's the way it has to be. You, at the end of the day, there's no one in this world that can tell you, especially when it's monetary related, or that things will get better, keep going. There's always going to be a self-doubt in the back of your mind. And unless you've put that work in yourself, then nothing will ever change. And you are going to give up at that point in time. There's no way of cheating it. You just have to sit there and go through it, essentially.
Decide for yourself. Because they're not the ones in your office making your executions like you are. So you either choose to face it head on or to stop.
Yeah, and that's the one thing I got to say. I do pride myself on all my investments and trades. Is everything is because of me. It's my own judgment. I haven't bought anything ever in my life because someone said, "Oh, this might be a good idea." I've just done it because I've went and done the research on something, or I thought that was a good idea. And okay, when things go wrong, or you go against someone's piece of advice and they sit there and they're like, "I told you so," you're stupid. But when things go right, you also have yourself to thank. And I think that's the other way of looking at it. You really can't rely on other people's sort of opinions, and you really can't rely on other people's judgments, because that self-doubt will just eat you alive.
I'm really glad that you said that, because it's personal ownership for what you're doing and how you're treating your trading. Because, by doing your own due diligence and understanding your market and your system and fine tuning it and really standing behind what your choice is, I think that's a key to the biggest success in trading the names that we have learned. they show up for the work and they understand the ins and outs of their system deeply. I mean, that's a huge thing that comes across to me from Warren Buffett, especially, is that he is such a voracious reader and wants to understand the ins and outs of everything. And so having that core understanding and fundamental base to operate from makes you so much more powerful in order to make stronger decisions, because you own it. You're not taking a signal and firing something off. You don't even know what your size is or what your risk is. You have figured that out and dialed it in. And so it's going to be a stronger stance to execute anything from in the trading industry, especially.
Yeah. One of the hot takes I would say as well, actually, from a lot of the presentations that I've done with D&D and Raj, I've done a lot in London, obviously, in Dubai there as well. I actually really like when people question my sort of data, or when they ask questions about sort of what I'm presenting, because at that point in time, again, it comes back down to ego and psychology. I would say probably one of my biggest fears in life is looking stupid in front of people. Right. And it was actually Raj that ended up getting that out of me in one of our sort of psychology sessions. So because of that fear, and again, it's about repurposing fear and ego, I always think, is anything that I then present on, like I have so much data then, or so much memory or knowledge on that subject, that I then can't look stupid in front of people because I have so much to fall back on. And I'll say, okay, I get your point, but this is why I think this, and this is why I think da-da-da-da-da-da, and so on and so forth. And that's really, again, that's another point that's sort of built onto me. And I think that, again, there's nothing wrong with having fear, and there's nothing wrong with having ego. It's just about knowing how to use them correctly. And again, repurpose it towards that. So I actually quite enjoy when people sort of question or doubt during some of the presentations, because it gives me an opportunity to sort of check myself and make sure that I'm still, actually researching and reading into things as much as I can.
Yeah. And it makes you stronger coming into that presentation, because you know that you're going to be potentially faced with questions. And so you're going to be extra prepared. And then that you're going to be able to be more confident in that situation, knowing that you have done the back end work and you're ready.
Yeah, I know. And that's even right now, the podcast, I'm sitting there and I got an entire Word document of a cheat sheet just in case I get asked a difficult question or something, so I can have something written down. Not because you can't necessarily memorize it, but more just so, say if I get caught out for a second, you can take a deep breath, you can look at it on paper and you go, right, this is what I need to get back on track. And then you jump straight back into it. But yeah, that's the biggest thing.
I gotta give you props, because this is why you are where you are at 25. And I love that people have said that there's luck involved, and that you say that there's luck involved, but there's not that much luck involved, because look at, like, you show up and you have done the work and you've got the good mentors behind you and you have listened to them and thought about it and adjusted your process as you go, and you show up and you prepare for things and take them seriously in life. And that creates a different life than half-assing it and showing up a little bit late and a little bit sleepy-eyed and like just doing your best. That's going to create a different trajectory, and someone who's going to have earlier profitability and have opportunities present to rise up within a company and help educate and pay it forward beyond that. That's going to be the guy who has done the actual work and been more prepared and taken it seriously and has the data to back up their system, because that's just a different stance. It's a stronger platform to which to speak to in terms of getting the results and getting in the rooms and getting, invited on the podcast, because you're like out there putting yourself out there, like responding to messages promptly and respectfully. And like, it's a type of energy and commitment to a business that will create a stronger result, I would say. So strong work, man.
Thank you. I mean, yeah, I definitely agree. It's his sort of, and I think even just trying to improve 1% a day or so. I read a really good book, actually, which was Atomic Habits, and that's what it talks about in there, of just trying to change small things, but 1% a day. So even like the start of this year, I had a serious look, and I was like, right, where can I improve? Okay, a lot of times I do, and I speak to people during the European session, and I do a session with D&D through that, and I was like, right, I need to make sure I'm on the ball game for that. So now all electronics get shut off an hour before bed, and I sit there, I read a book, and I have a infrared lamp on. And I actually feel so much better. The first thing in the morning as well, that's the sort of first light that I turn on, is my infrared lamp. And I feel so much better for it in the mornings now. So I'm more energized when it comes down to taking these sessions and talking to people. And for me, that's where, things, it's just such a tiny little improvement. But
Yeah.
I feel like if I'm so much more fresh faced, then I'm so much less likely to make a stupid mistake on something.
Market Mamas, I have a series within the podcast called Must Read, because there's so much good books out there. But absolutely, the very first must read episode is Atomic Habits by James Clear, because it is excellent. It has nothing to do with trading, but it's about being your best self and breaking that down into actionable habits. And it's really such a good read. For anyone who hasn't read it, like, you have to read it. But I love that whole concept of 1% better every day, because if you break it down into bite-sized pieces and make it, little tiny tweaks that you can do, and then just always aim to do tweaks here and there and strive to improve, not to be perfect and not to like make it all happen in the next 3 months. But that makes it so much more realistic, and you can have more patience and peace with your journey and enjoy the ride along the way, knowing that you don't have to do it all by Friday. I think that it's a more enjoyable ride and more realistic, honestly, to get where you want to go, at some point.
And I think trading's exactly the same. So many people just want to make that money overnight. They need to realize that it's not even 1% a day. Is just turning up and executing that same strategy, that same trade every single day is what'll get you to your end goal. But again, it's slow, it's boring, it's not exciting, and that's where most people, they fail. I don't know why this. I think it's because of Instagram, and I think it's all the people that that advertise in their marketing of this luxurious lifestyle and all of this, but it's just not true for the 99%. And I think we just need to remember that. We need to be realistic about that. There is a few people that obviously slip through the cracks, but you get enough sample, as you said, there's millions of people that trade. Of course, there's going to be one guy that gets lucky, he's made millions off of crypto or something. That's just the way it happens. But, I wouldn't necessarily join this thinking that you're going to be that one.
Yeah.
And it sounds kind of horrible, but it's true. I've met a lot of people, and obviously Raj spoke about it to you, about systematic trading versus sort of intuition. And there is some traders that I see that purely trade off of intuition, but they're a 1 in a million. And chances are, if you're listening, to podcasts, or you're, seeking training or help, you're not that one out of the million, because that person's already off, and they've done what they need to do. And I've seen maybe 2 in the 6 years that have been like that. But what you need to remember is there's nothing wrong with you because you're not like that. You just have to take the systematic approach. And at the end of the day, hard work does beat raw talent if raw talent doesn't work. And that's sort of the main thing. But these people as well with intuition, they have their own struggles too. A lot of these people, they'll do really well for a while, and then they're going to burn out because they're not used to hard times. And I think you see that as well with school. Some people do really well in school until they move up a level and they go to med school or that. They've never had to study on their exams before, and then all of a sudden, because they were relying on nothing but raw talent, but things have got actually quite difficult, that's when they start to sort of fumble and fall through.
And there can be an ego situation involved in that as well. Like when you are purely discretionary and you have found early success, that there's a lot of grayness in discretionary trading, a lot of areas where you could fall through the cracks essentially, and you could take really big hits in that situation. And so I think, if you do feel like you could be a discretionary trader, definitely put rules around that. Like there needs to at least be some sort of structure so that you can stay in the game long enough and not lose all of your monies.
Yeah, I mean, I know obviously James that owns the companies as well. He's very much more sort of trades off of instinct too. And again, he's a 1 in a million kind of guy. And I hope he doesn't watch this podcast and inflate his ego off of that. But he really is. And what was actually really interesting to me was, it wasn't until we had a conversation when we were doing a presentation and talking about obviously because with D&D, you get like professional psychologists and that come in and they talk about the trading. And James he said he always thought that something was wrong with how he traded and wrong with him until he actually spoke to the psychologist, and he realized that he's actually just different, because everyone keeps telling him go down the systematic approach, but what he was doing was working. So why should he change? But again, we just need to remember that these sort of people, they aren't your average individual that comes into this off the retail world. Sadly, we do have to go through the statistical hardship, building a strategy from sort of scratch, collecting all that data, spending months going through all of that, running simulation tests to see what's problem. It's just the hardship we're going to have to do. But if you keep grinding, and you've got a few years worth of a sort of map rolled out, there's no reason why you can't eventually make it through.
Yeah. So good. Such a great point. Yeah. I think that trading I think we get into, a lot of early traders will get into it because they think that you can make a lot of money just by chilling at home and at your computer. But I think the heart of it is that in order to really make it work and to make it consistently profitable and to have a sustainable business model from it, you have to take it real seriously and dig into the work of it. And I'm really glad that you spoke to a lot of that. And you are here 6 years into your game, like really doing well for yourself. And I think that puts a nod to this of like, if you want this thing of trading, show up for it in the best way that you can and just keep trying and aim for that 1% better and aim to like show up for the work of it.
Yeah. And I mean, really, I would say it took me about 4 years until I actually seen any real progress, to be honest with you. So it is a hardship. I think, it didn't just happen overnight, guys. And I think, again, that it's really, really hard. And I think that's where discipline really needs to kick itself in, because there's so many days without motivation. And it's just life, isn't it, at the end of the day?
Yeah. I wasn't at red until like 3.5 years into my trading journey. And then I, flipped the corner and I'm nowhere near as profitable as I intend to be. But once you can just even get to that break even point, recognize that that's taken a lot of work to get there, and to like, trading is full of abundance and incredible potential, but, let it take time, I think, is a powerful vantage point, approach.
Yeah. You just can't cut a corner. There is no corners to cut. And if you do find a corner to cut, it will come back and you will reap the consequences of it.
Yeah.
That's kind of the sad thing about this. There is
cautionary
no way
tale.
There's no way to cheat it. If you get built up too much and you show too much ego, like I did when I first started off, it will humble you in the worst ways possible. It's like it sits there and just knows exactly any bad habit that you're doing. It's like, right, this is how we're going to get back at them. This is how we're going to humble them. And it'll wait. It might not happen tomorrow, but it does come. Yeah, it's it's a bit freaky the way that the universe works in that sense of especially with trading. There's just no shortcut.
It's like the standard deviations. You get still extended, there's going to be a little bit of a pullback, my friend.
Mm-hmm. I know.
Well, Ross, thank you so much for your time today. I really appreciate you hopping on with me and going over some of your journey. And I think we actually could talk for a very long time, but we probably better let the viewers get on to the next pursuit on YouTube today. Yeah,
well, thank you very much for having me on. It was much appreciated. Like I said, I watched a couple of your episodes beforehand and I thought they were fantastic. And you seem to have a really good community base as well, in the comments and that, people that are actually willing to sort of learn and talk about trading. So that's just fantastic to see. So yeah, I hope you have a great day.
Thank you. You too. Yeah, Market Mom was just growing up, so I appreciate everyone for staying with us. I'll put some links in the description so you can reach out to Ross if you would like, and follow us for more great interviews to come and conversations all around trading psychology, and may your best trading days come forward ahead. Take care, everyone. Thanks, Ross.
Thank you very much. Have a good one.